Hello, and welcome to Calling Monster Finance. It's September 8th, 2025. Today, the U.S. markets pushed higher, with the Nasdaq Composite closing at a new record high. The session was characterized by a broad sense of optimism, but with significant divergence beneath the surface. The main story of the day was a growing conviction among investors that the Federal Reserve is preparing to cut interest rates, a sentiment fueled by last week's weak labor market report. However, the day's biggest moves were driven by major corporate news, including a landmark deal in the telecommunications sector and a significant shakeup in the S&P 500 index. Ahead, we'll break down how these competing narratives shaped the trading day, analyze the key macroeconomic drivers, and examine the specific sector performance before recapping the final numbers. U.S. equities advanced today in a classic bad news is good news scenario. The Nasdaq Composite led the charge, closing up 0.45% to reach a new record of 21,798.7. The S&P 500 also gained, rising 0.21%, while the Dow Jones Industrial Average added 0.25%, with both indices finishing just below their own all-time peaks. The positive tone was set by the market's interpretation of last Friday's jobs report. That report showed the U.S. economy added a surprisingly low 22,000 jobs in August, a clear sign of economic slowing. For investors, this weakness is seen as a green light for the Federal Reserve to begin cutting interest rates to support the economy, potentially as soon as its next policy meeting. While this macroeconomic outlook provided a tailwind for the broader market, the most dramatic action was seen at the individual company level. The day's major headline was a deal valued at approximately $17 billion for Elon Musk's SpaceX to acquire wireless spectrum from EchoStar. This move sent shockwaves through the telecommunications industry, pressuring established carriers and contributing to the communication services sector's 0.31% decline. In other major news, S&P Dow Jones indices announced that Robinhood Markets and AppLovin would be added to the S&P 500. This news sparked a buying frenzy, as funds that track the index will now be required to purchase these stocks. Robinhood surged an incredible 15.83%, while AppLovin jumped 11.59%. Despite the gains, the session was not without a sense of caution. Investors are closely watching the ongoing legal and political battles surrounding President Donald Trump's tariff policies, as well as key inflation data due later this week. Today's rally was built not on strong economic fundamentals, but on the expectation of cheaper money from the Fed. This creates a fragile dynamic where any data that challenges the rate cut narrative could trigger a swift market reversal. Let's take a deeper look at the primary forces that drove today's market action. The first and most significant driver was the expectation of a dovish pivot from the Federal Reserve. The market has now almost fully priced in a rate cut at the upcoming FOMC meeting. This conviction stems directly from last week's jobs report, which was seen as a clear signal that the labor market is cooling faster than anticipated. This belief was reflected in the bond market, where the 10-year Treasury yield fell by nearly 1% to close at 4.05%, indicating investors are anticipating lower rates ahead. However, data released today from the New York Fed's Survey of Consumer Expectations adds a layer of complexity. While the survey confirmed a deteriorating outlook for the labor market, it also showed that short-term inflation expectations remain persistent, ticking up slightly to 3.2%. This highlights the central bank's core dilemma: a slowing economy versus stubborn inflation. For now, the market is betting the Fed will prioritize growth over inflation control. The second key driver was company-specific news that created clear winners and losers. The announcement that SpaceX will acquire wireless spectrum from EchoStar is being interpreted as a major long-term competitive threat to incumbent carriers. This strategic move by Elon Musk to bolster his Starlink direct-to-cell service immediately pressured the stocks of major telecom companies, making the communications services sector one of the day's few losers. Simultaneously, the decision to include Robinhood and AppLovin in the S&P 500 index provided a powerful technical catalyst for their stocks. The announcement guarantees a new wave of demand from passive index funds and exchange-traded funds, or ETFs, that must own the stocks in the index. This forced buying led to today's massive rallies, with Robinhood gaining over 15% and AppLovin climbing more than 11%, demonstrating how index rebalancing can create significant short-term price movements independent of broader market trends. Turning now to commentary from key public figures, we begin with developments related to President Donald Trump's administration. While there were no direct market-moving statements from the president today, the market continues to grapple with the uncertainty surrounding his trade and tariff policies. The administration's tariff regime is currently facing a critical legal challenge at the Supreme Court. This issue was brought into sharp focus over the weekend by Treasury Secretary Scott Bessent. He issued a stark warning that if the court rules against the administration, the U.S. government could be forced to refund as much as $1 trillion in collected tariffs. The secretary described this scenario as a potential major blow to the Treasury. This warning elevates the tariff dispute from a matter of corporate profit margins to a significant fiscal risk for the U.S. government itself. The uncertainty over a potential $1 trillion liability for the Treasury may have contributed to weakness in the U.S. dollar today. The U.S. dollar index, which measures the dollar against a basket of other currencies, fell 0.32% to close at 97.46. Meanwhile, Elon Musk was at the center of several market-moving stories. The most significant was the $17 billion SpaceX deal to acquire spectrum from EchoStar, an aggressive strategic move to expand his satellite communications empire. In a more defensive move, reports noted that Tesla has quietly updated the language on its website for its full self-driving feature. The description now explicitly states that the system requires active driver supervision and does not make the vehicle autonomous. This clarification comes amid increasing legal and regulatory scrutiny of the technology's capabilities and may have weighed on investor sentiment. Tesla's stock underperformed the market today, closing down 1.27%. While the major indices all closed in positive territory, a look at the sector performance reveals a more complex and divergent picture. The clear leader today was the information technology sector, which gained 0.67%. This outperformance is consistent with the day's main narrative, as technology and other growth-oriented stocks are often seen as primary beneficiaries of lower interest rates. On the other end of the spectrum, the utilities sector was the biggest laggard, falling 1.07%. It was followed by the real estate sector, which lost 0.68%. Both of these sectors are traditionally sensitive to interest rates, but their underperformance today suggests some investor concern. The combination of a slowing economy and persistent inflation creates a risk of stagflation, and an environment that can be challenging for these defensive sectors, even if the Federal Reserve does cut rates. As mentioned earlier, the communication services sector also finished in the red, down 0.31%. This decline was largely driven by concerns over increased competition following the announcement of the SpaceX and EchoStar deal. In contrast, sectors like consumer discretionary, which rose 0.53%, and industrials, up 0.21%, posted modest gains, reflecting the broader market's cautiously optimistic tone. Now, let's take a moment to recap the closing numbers for today, September 8, 2025. For the major U.S. indices, the Dow Jones Industrial Average closed at 45,514.95, a gain of 0.25%. The S&P 500 index finished at 6,495.15, up 0.21%. The Nasdaq Composite ended the day at 21,798.7, adding 0.45%. And the Russell 2000 index closed at 2,394.89 for a gain of 0.16%. Turning to key commodities, currencies, and yields. The CBOE Volatility Index, a measure of market anxiety, fell 0.46% to 15.11. The U.S. dollar index declined 0.32% to 97.46. The U.S. dollar to Japanese yen exchange rate was 147.55. The yield on the 10-year U.S. Treasury note fell to 4.05%. Crude oil rose 0.95% to 62.46 a barrel. Brent crude oil gained 1.08%, closing at 66.21 a barrel. Gold added 0.67% to finish at $3,677.60 an ounce, and the price of Bitcoin rose 0.65% to $111,961.28. Finally, let's look at the top 5 stocks by trading turnover today. In first place was Nvidia, which gained 0.77%. Second was Tesla, which fell 1.27%. Third was Broadcom, which posted a strong gain of 3.21%. Fourth was Robinhood, which surged 15.83%. And in fifth place was Apple, which declined 0.76%. In summary, today's session was driven by a powerful narrative: the anticipation of a Federal Reserve rate cut in response to a slowing economy. This propelled the Nasdaq to a new record and lifted the broader market. However, the day was also defined by significant company-specific events, from major acquisitions in the telecom space to index rebalancing, which created dramatic divergence among individual stocks and sectors. Looking ahead, the key variables for investors to watch will be the upcoming inflation reports, specifically the Producer Price Index and the Consumer Price Index. This data will be critical in either confirming the market's dovish expectations or forcing a reevaluation of the Fed's likely path forward. If you found this analysis helpful, please hit the like button, subscribe to our channel, and share this video with your friends. The content provided on this channel is for informational and educational purposes only and does not constitute financial, investment, or legal advice. All investment decisions should be made with independent due diligence and in consultation with a qualified professional. While we strive to ensure the accuracy of the information presented, we cannot guarantee its completeness or correctness. Any risks or losses resulting from the information on this channel are solely the responsibility of the individual. The views and opinions expressed in this video are those of the speakers and do not necessarily reflect the official policy or position of this channel. This content is not an offer or solicitation to buy or sell any financial instruments.